We have with us Meesho's top management right here in our studios. And let me welcome on the show Vidit Atre, who is the CMD and CEO of Meesho, and Dhiresh Bansal, who is the CFO. Gentlemen, so good to have you in our studios right here, just when you're kick-starting the entire process. Now, first question, Vidit, when you go to the shareholders and the large public, you are expecting the subscription as well as the momentum being built around your company and the applications coming in. What will be your 1-minute pitch to any shareholder who is in two minds about subscribing to this IPO?
Yeah, so I think 1-minute pitch is very simple. Meesho is today India's largest e-commerce platform in terms of the number of customers we serve as well as the orders. Last 12 months, we had 23 crore Indians buying at least once on Meesho, and we had 230 crore orders, right? Like, so both of them are the highest for anyone. And both of these are true while we're also growing very fast. So if you look at the first 6 months of this financial year, our orders grew by about 53%, net sales grew by about 44%. So we are maintaining good levels of growth because it's a very large market that has a high potential for growth for the coming years. And we've been able to do it with very high discipline around finances. So if you see the last 2 years, we as a company have been free cash flow positive. For FY25, we generated about 1,000 crores in cash. So I think it's a very unique story that has very fast growing dynamics, already has market leadership in the value segment, and is able to keep generating cash flow. I would also say that our mission is something that also connects with a country like India. Our goal is, how do we really democratize e-commerce for all consumers, businesses, logistics companies? And if you look at from that mission standpoint, there's a lot of potential left in the Indian market still.
All right, a lot of potential there, and thanks for explaining Meesho's mission with it. But, you know, you spoke about the market growth and the number of orders. I thought we have gone past that particular narrative of a large market share, and we had moved towards profitability. And that's what most of the startup companies, platform players have been trying to show to really attract the market participants. Now, when we talk about the profitability angle, Dhiresh, you're the man of numbers. It's a loss-making company. You've made it to the IPO. Of course, your order, volumes, everything is really kicking in. But growth versus profitability, what's the profitability path for the shareholders to take cognizance of?
Absolutely. And I think some part of it, Vidit also addressed, the metric that we focus on first and foremost from a profitability standpoint is free cash flow. And we had also ourselves decided that we will not come to the public markets unless we have proven that we are free cash flow positive. And we did that for 2 years. Last year, we were free cash flow positive, the year before that as well. And even if you look at 6 months ending September 25 and sort of period there, we have generated about 1,000 crores of cash again. So I think in our business, it has great potential from a platform standpoint that once you grow at this pace that you're growing, the growth itself leads to a lot of fixed cost operating leverage. There are levers around monetization that we haven't fully unlocked, including the ad revenues that we have in our business, which will continuously kind of grow in our expectation from here on. And that will not only fulfill the market's demand of hopefully free cash flow, but also other accounting metrics like EBITDA and PAT.
Right, so many aspects there, but with it, which is the most important lever that you're really betting on after the IPO to show momentum on the profitability space? Because you have that growth. 1/4 of the amount that you're raising is going into your marketing expenses. And the other, a large portion is also going into AI build-up and hirings there. Which is that lever which is going to fire on all cylinders for making you reach the profitability?
I think apart from the two big levers that Dhiresh talked about, which is like our advertising revenue growing, as well as the logistics revenue growing, I think in general, because we are a tech business, the marginal costs are very low. Once you build out the platform, you don't have to keep putting variable cost every single day. So if you can keep growing the platform like much faster, then your costs scale up. There's a lot of operating leverage, which will automatically flow to the bottom line. So I would say growth is not just like growth for the sake of growth, but it also improves profitability in a business like ours, because we are a like platform kind of a business. Apart from that, by the way, we are also investing in some of the newer initiatives which could also become like a mainstream source of revenue for us in the long run. So in content commerce, like today, we do not charge any take rate when a seller pays an influencer on the platform. That once the platform scales up quite a lot, there's an opportunity to make more money there. Apart from that, we are also experimenting with financial services products for our users as well as sellers. Again, very, very early, but there's a large money to be made even there. If you look at some of the large markets, emerging markets like India, China, Southeast Asia, South America, some of the largest value commerce platforms also have very large financial services businesses.
Yes.
So if we kind of make some of those out, I think those are large opportunities. So we have strong revenue drivers with logistics as well as advertising, but we are also investing in some of these things along with growth, adding operating leverage. So there's a large runway of growth and profitability from here on.
Many aspects you said, and financial services is definitely one very, growing segment in the country. But platform fees, what is your view on that and the plan?
First of all, we don't believe in platform fees as a company. Like we believe very strongly that whatever you want to charge the customer should be upfront in the price of the product so that people do not have any surprises, and we have generally followed that. I don't anticipate that to change going forward. It's not about like 1 rupee platform fee or 5 rupee platform fee. I think it's just about believing what the principles of the business are. Different businesses have different needs. In our case, we want the customer to come back to us and buy very often. So if you see, we have a very good frequency per user per year, which has been consistently growing 7.5 times 2 years ago to almost 10 times, and continues to grow even from here. So we don't want to add any friction for people to come back and transact more often.
So no to platform fees.
Yes.
That's a very important decision because that can really create a lot more, performance when it comes to your numbers. But now, Dhiresh, with your CEO telling you no platform fee, which are the areas that you're going to improve on? And I would like to ask that how did the contribution margin really improve despite a sharp drop in the average order value? And how is the contribution margin going to really go up going forward? Can you give us a little more detailed plan on that?
Absolutely. So if you look at the historical trajectory that we have had in our business with Valmo and the other initiatives that we have been able to take around cost efficiencies, our variable cost per order has been coming down consistently over the last 3 years. Now, some of this cost saving that we had, we passed on to our sellers and customers in the form of lower pricing. That enabled a lot more products to be sold on the platform, lower priced ones, higher priced ones, etc. But it definitely unlocks the lower price points. So that's why you see the AOVs kind of coming down. It's a feature that we have kind of designed for as we take down the logistics cost. And again, the other lever which we have, which is the advertising revenue, that has also been consistently increasing. Going forward, again, these are the two levers. And if you look at profit pools and revenue pools globally in terms of e-commerce companies, these are two of the most formidable ones. These will continue to be the mainstay of improving our contribution margin from where we are. If you look at our ad revenue today, we'd be roughly about 1/3 of where the large global benchmarks are. And there is a lot of headroom to kind of grow there. Our effort right now is to first get most of our sellers to start advertising. And then with more competition, newer products, we're also investing in a lot of AI algorithms in the ad space side. The consistent movement of contribution margin would come from ad revenues increasing.
So what is the internal aim and target for PAT performance?
So I think, like I had mentioned before, we take goals from a bottom line perspective on FCF, and that's what we hold ourselves accountable to the board and to kind of our shareholders today. And even in the future, we will communicate on that basis. I think PAT is an outcome, which comes as we kind of grow the contribution margin.
But Dhiresh, we asked what's the bottom line when you're in a business. So therefore, I wanted to know how many years you have internally as a target.
So I think because of the regulations, we can't share a specific timeline right now. But again, we'll continue to communicate on this extensively as we become public. We'll understand that we hold an accountability.
But a clear focus is there on profitability.
Absolutely.
With it, right?
Yes.
All right. And with it, final question to you. you know, the peer comparison, how do you position yourself? You have a differentiated model. We haven't spoken much about Valmo, but the market is really excited about Valmo and the efficiencies that they have brought in, and you have already stated that more innovations will come in. Now, how is this particular model differentiate you, and also the peer comparison in terms of the valuation? And I ask again and again about the valuation picture because many companies have hit the market from the startup space at a certain valuation, but they have not managed to sustain it even for the first 10 days of their listing. That is one scenario which has really built up and is a theme for this year. The second important theme is that in the last 4 years, the number of startups we have seen which have hit the market have not yet started giving shareholder value from their IPO price. So that means, are you accounting for 5 years of growth in your valuation when you list? So a lot of aspects, but you get it, valuation, peer comparison.
Yeah, so I think I will ask Dinesh to kind of talk about the peer comparison valuation, but I'll just kind of lay this foundation. As you said, there is no absolute peer set like us in India. We are a very unique story, and I think it's very important for shareholders to also realize this. We are a completely asset-light, capital-efficient business model that can continue to grow at a very fast pace while generating free cash flow. How many businesses can you find in India that can talk about it? And free cash flow basically means that we never have to go out and dilute our shareholders again, because we'll add money to a bank account, which is not the case otherwise.
So free cash flow is your main pole plank. Just to add to that, peer very quickly.
So peers, I think we've also described it in our RHP. There are two sets of peers that we are looking at. There are value-focused retailers, which is
You're
a one set.
You're closest to Avenue Supermart in some sense, which is an more offline player when it comes to the revenue and the valuation parameters.
Yeah, I mean, again, like we described, because the aspects around, let's say, platform, capex-light nature, et cetera, are somewhat different. But some of the growth dynamics, some of the end users, which kind of have, we have and they have, might be more similar. Again, categories.
No apple-to-apple comparison. I understand that. Dinesh, Vidit, thanks so much for joining us here, and all the best for your public issue. Thank you so much.